Hey everyone, welcome back to Corporate Decoder, the place where we decode corporations. Today we're diving into a proxy statement for Boyd Gaming, and let me tell you, there's a shareholder proposal in here about smoking policies that's going to get heated. It's like a poker game where everyone's holding a lighter. This isn't your typical financial report like a 10K. It's a document sent to shareholders before an annual meeting so they can make informed decisions about how to vote. Think of it as a cheat sheet for the company's big decisions. We're talking director elections, executive pay, and even those shareholder proposals that can sometimes ruffle feathers. First up, the election of directors. This is where shareholders get to choose who sits on the board, the group of people overseeing the whole operation. 8 seats are up for grabs, and the company's recommending a slate of familiar faces. These folks have backgrounds in gaming, hospitality, finance, and law. It's like assembling a casino heist crew, but for legally running a casino. Next, there's the ratification of Deloitte and Touche as the independent accounting firm. It's basically asking shareholders to say, hey, we trust these guys to keep the books straight. Companies use independent auditors to make sure everything is above board, financially speaking. Then we have the advisory vote on executive compensation. This is where shareholders get to weigh in on whether they think the top dogs are getting paid fairly. It's non-binding, meaning the company doesn't have to listen, but it's a good temperature check on investor sentiment. It is literally a say-on-pay vote. And now the main event, a shareholder proposal about commissioning a report on the effects of a company-wide non-smoking policy. This is where things get interesting. A group of investors wants Boyd Gaming to study the potential cost savings of going smoke-free. Think about healthier employees, lower cleaning costs, and maybe even attracting a new crowd of non-smoking gamblers. Let's take a quick look at who's on the ballot for the board. We've got Marianne Boyd Johnson, the executive chairman and daughter of the chairman emeritus. Then there's Keith Smith, the president and CEO, and William Boyd, another Boyd family member. Having family members at the top can be a strength or a weakness depending on how you look at it. On one hand, you get generational knowledge and deep commitment, but on the other, you can have groupthink. Boyd emphasizes things like an unclassified board, separation of chairman and CEO roles, independent committee members, and anti-hedging policies. All these things might sound like corporate jargon, but they are all very, very important and make sure the company is in tip-top shape. Quickly looking at the directors' compensations, they are quite ordinary and what you'd expect at a large public company. There are not really big incentives and not very small ones. Now let's talk about the money, shall we? The report shows that Keith Smith, the CEO, raked in a cool $11.4 million in total compensation for 2024. Not bad, right? But it's not just salary. A big chunk of that comes from stock awards and other incentives tied to the company's performance. The short-term incentive plan was based on adjusted EBITDA after corporate expenses, a key measure of profitability. Basically, how much cash the company is generating. Meeting certain corporate social responsibility goals made up for 10% of that payout. Adjusted EBITDA is kind of like a company's heart rate. It tells you how healthy they are. Boyd hit 100.5% of its target, meaning the executives got pretty nice bonus. Long-term incentives came in the form of time-based RSUs, performance shares, and something called career shares. RSUs are restricted stock units, which basically turn into shares of stock over time. Performance shares, those depend on the company hitting certain goals. And career shares are like a retirement bonus, encouraging executives to stick around for the long haul. If you look at the summary compensation table, you can see that CEO's salary in 2024 was $1.6 million plus $6.6 million in stock awards plus $3.1 in non-equity incentives, with an additional $31K in all other compensation. Before we continue, it's worth mentioning the anti-hedging and clawback policies. These are like seatbelts for executive behavior. The anti-hedging policy prevents execs from betting against their own company, and the clawback policy lets the company take back incentive pay if there's some kind of financial restatement or misconduct. Here's a fun fact, the CEO's pay ratio. The CEO made 34 times what the median employee made. That's definitely something to think about. The median employee's salary increased to nearly 38K. The pay versus performance table is very interesting and important. While the CEO made millions, if you look at the value of $100 invested in 2019, that value increased to about $250. The company's performance has greatly increased shareholder value, so is the CEO pay justified? That's for you to decide. Now back to that smoking proposal. Those supporting the proposal talk about the health risks of secondhand smoke and mention that casinos that are smoke-free are doing better than ones that allow smoking. They also mention that staff morale might be higher. However, the board recommends you vote against this proposal. They're basically saying that customer experience is key and a one-size-fits-all smoke-free policy could hurt business. Smoking bans in some areas had a negative impact on customer loyalty. One last little thing to note. There were a couple of late filings related to stock sales, but the company says it was due to an administrative error. This happens if Chow, what's the verdict on Boyd Gaming? Strengths a strong track record of increasing shareholder value, a commitment to good corporate governance, and a clear focus on customer experience. Weaknesses, the potential for family influence on the board and the ongoing debate over smoking policies. That smoking one is an increasingly contentious issue. Overall, Boyd Gaming seems to be navigating a complex industry pretty well. The company is balancing shareholder value with the evolving preferences of its customers and the well-being of its employees. As long as it doesn't get burned, Boyd Gaming should continue to rake in the chips. If you found this corporate deep dive insightful, don't forget to hit that like button, drop a comment, and subscribe for more. Thanks for watching.